Hello, investors. My name is Aditya Gain,
It was a Beatadori.
and this is our presentation on why you should buy Uber. But first, what is Uber? Uber Technologies Inc. is a global technology company connecting individuals and goods through an online network. It operates in three key segments: mobility, delivery, and freight. The mobility segment, which includes ride sharing, car sharing, rentals, and public transit, is the largest revenue contributor. The delivery segment generates the revenue from food, grocery, and retail deliveries, while the freight segment connects shippers and carriers. Uber leads the US ride-sharing market, holding a 76% share, while Lyft holds a 24% share. Globally, Uber faces a little bit more competition from regional players such as Didi and Ola. Proposal information. We recommend buying and holding Uber because we believe there's an upside potential of 84% and expect its value to go from $74 to around $134.
Investment thesis. Now that we've discussed Uber's overall structure, market position, and global reach, let's shift focus to the investment thesis that underpins our recommendation. Diversified revenue stream. Uber's varied revenue sources from mobility, delivery, and freight make it more resilient to market changes and support its growth, with Uber One also offering additional benefits to members. Expansion into autonomous vehicles. As the world is moving to a more sustainable future, companies will have to adapt to regulations and changes placed by governments. However, Uber is already preparing for this. Uber is committed to reaching zero emissions and being all electric by the year 2040 by partnering with Waymo to expand into autonomous vehicle technology. Brand recognition. Uber is a globally recognized brand, and its name is often associated with ride sharing. Its brand recognition also extends to services like Uber Eats for food delivery and Uber Freight for logistics. Moving on to the broader industry context, let's look at how Uber fits into the overall market, particularly in the rideshare and food delivery markets. The global ride-sharing market is valued around $150 billion in 2025, and is expected to grow at a compound annual growth rate of over 18% between 2025 and 2034, and reach an estimated value of $700 billion by 2034. The rideshare industry is most prominent in Asia and Pacific regions, and the Asian Pacific regions are experiencing rapid growth in the market because of the large growing populations of countries like India and China, and this increases rideshare companies' influence in these regions. The food delivery industry will be valued at around $257 billion in 2025. And Uber's biggest competitors within this segment are Grubhub and DoorDash. Uber is relatively small compared to these industries in the food delivery segment. However, this can be attributed to the majority of Uber's focus being on the rideshare industry.
Competitive positioning. As we examine the market dynamics, it's important to measure Uber's competitive position. Network. Uber's global reach and developed platform spans across many regions, and this large number of users appeals to many newer users. Brand recognition. Uber is one of the most, if not the most recognizable sharing app in the world. It's often the default choice for many when choosing to get a ride. Data and technology. With a wide array of data on different conditions, Uber gains an edge over smaller competitors who may not have such advanced systems. Autonomous vehicles. One of the key drivers of Uber's future growth is its investment into autonomous vehicles. Uber has committed 3.1 billion to research and development in 2024 alone, with most of it going toward autonomous vehicles. Compared to its competitors, Lyft and Didi, Uber is investing more heavily into research and development. Uber's larger research and development budget enables it to take a more aggressive and comprehensive approach to autonomous vehicles. Uber has also partnered with other companies such as Waymo, a leader in autonomous driving technology, to develop self-driving cars. The autonomous vehicle initiative is expected to play a key role in Uber's future growth as it aims to transform operations and decrease operational costs over time. Revenue drivers. While autonomous vehicles are crucial to Uber's long-term strategy, it is also important to understand the day-to-day drivers behind Uber's revenue growth. There are three main drivers. Surge dynamic pricing. Surge dynamic pricing uses algorithm-driven pricing to adjust the ride fares based on external conditions such as traffic and weather. Market penetration. Uber's global expansion into over 70 countries creates a large network of drivers and riders that generates multiple revenue streams from all around the world. Asset-light business. Unlike regular taxi companies, Uber doesn't own any vehicles. Instead, it relies on personal drivers' vehicles. This allows Uber to maximize the cost and not have to worry much about vehicle maintenance, and this allows them to grow the company out more.
Financial analysis. Having looked at the revenue drivers, let's now evaluate how Uber's financial performance has been shaped by these factors. Since the COVID-19 pandemic, Uber's net income has increased by 422% to almost $10 billion, with EPS also growing over 400% to $4.70. While these figures show strong profitability, rapid growth also brings risks and could disappoint investors if earnings miss expectations. Uber's strong position is supported by large free cash flow of $7 billion and its consistent revenue growth in mobility and delivery. But investors should be cautious of potential stock overinflation. Looking to the graph, Uber's profitability has rebounded since the COVID-19 pandemic. In 2022, it had a net margin and ROA of negative 29% due to reduced mobility demand. However, by 2024, its net profit margin improved to 22.4%, up 5.1% from 2023, and operating margins more than doubled to 6.4%, reflecting better cost control. Despite this, continued investments in autonomous vehicles and expansion may limit dividend potential in the near future. Stock valuation. Our 2030 target price for Uber is $134 per share, reflecting an 84% upside, and this is based on the following. Our DCF analysis suggests an intrinsic value of $57.20, which is 30% lower than the current price, making the stock overvalued. However, Uber's PE ratio of 16.6 times is 10 times below the industry average, indicating potential for future outperformance. And we expected annual revenue growth of 13% over the next 5 years. Though investments in autonomous vehicles may lower this growth due to capital costs impacting cash flow. Investment risks. While Uber shows strong growth prospects, it's essential to consider the risks involved. Legal and regulatory risks. Uber faces ongoing legal challenges and government regulations that could increase expenses. A recent lawsuit over driver classification could have forced Uber to provide benefits, wages, and insurance, impacting profitability. Additionally, expansion into countries like Germany, Japan, and Spain remain difficult due to strict ride-sharing regulations. Dependence on major cities and third parties. A large portion of Uber's revenue comes from metropolitan areas, making it vulnerable to economic downturns and public health crises. Uber also relies on third-party platforms, making it susceptible to system failures and cyber attacks. Inconsistent profitability. Despite high revenue, heavy spending on operations, driver incentives, and customer discounts limit profit margins. Competitive pricing pressures and negative reactions to surge pricing also impact demand. ESG considerations.
Uber has a 21.8 ESG rating, which is a medium risk, ranking 468 out of 965 of the software and services industry companies. Labor disputes and driver classification issues are key challenges due to its use of independent contractors. Sustainability and energy efficiency. Uber offers employees benefits like health insurance and mental health resources, and also is aiming for 100% recyclable, reusable, or compostable packaging by 2030. And for Uber delivery, is working towards zero emission riders. Society. Uber partners with organizations like MADD and DrinkWise to raise awareness about alternatives to driving under the influence. And in 2021, they offered over 2 million discounted rides for COVID-19 vaccinations and donated 1 million to Meals on Wheels. Governance, compliance, and diversity. After a 2016 data breach, Uber improved its data security and governance under CEO Dara Khosrowshahi and promotes diversity and inclusion through its Equity Leadership Council. Integration of AI. AI is becoming increasingly important for optimizing Uber services and is helping the company scale its offerings in the future. Uber is using AI technology to streamline matching a driver with the rider and helping model surge prices and adjust AI prices based on local environments, generating more revenue. Thank you.